welcome back to another trading video. For this week's weekly recap, what we're going to be going over is my analysis for last week's GBPUSD long order. So for those of you that are familiar with the way that I trade, you guys know that I like to trade the market maker method. And the reason I like to trade that method is because for me personally, due to past experience, trial and error, trading other methods and ways of trading, this is just what I've found is the best way of trading for my trading style. I like to catch reversals. I like to catch orders on the opposite direction of a trade. I like to identify where market is considered to be overextended and then catch the reversal, picking up the pending orders on the other price points inside the market. So, for example, what I was seeing for last week was clearly in this market we were overextended at a very, very high position. Previously, you can see I was trading the 1, 2, 3 level structure on the bullish direction, and then let the chart play out a bit, make its moves, because obviously I'm not trying to predict the market. Once I enter a trade, once I catch that reversal, I let it play out, right? So that's exactly what I did. Right now I'm on GBPUSD, the 15-minute time frame. The time right now is 5 p.m. on a Sunday. It's actually 5:16 to be exact. So market just opened. All right. So as of right now, you can see we're playing off the previous high zone from our previous level 3, which is a strong indication. If the market reverses from this direction, which it did in this case, we're going to have a bearish 1, 2, 3 level structure to the opposite side of this level structure. All right, so that's exactly what happened. Market came up, second leg, stop hunt overextended, broke the level box. Once it breaks that level box, we know we're in a stop hunt zone. Once we know we're in our stop hunt zone, wait for that second leg retest, wait for the stop hunts to get triggered. Market maker picked up the pending orders of short traders in that position, stopped out the longs, came back, dropped. Right, all the way from the top of level 1 all the way down. Once we played inside level 1, market accumulated a bit towards the lower zone. Market came back up again, second leg M top. This is not the M that we care about though. Why? Because it's not at a price point of rejection, right? We care about the high M because that's an indication that market maker picked up pending orders from the previous trade, the previous level 3 in this case, and wanted to stop out those retail traders and pick up the orders that were left behind in that case. All right, market breaks, market vectors out of that zone. Why? Because it doesn't want retail traders to get in, identify his move, breaks the structure, because now they think, oh, this is a support and resistance zone, right? So they're going to sell, sell, sell every time it retests the top, and then they're going to buy, buy, buy. In this case, this third buy position stopped out right away, right? He wanted to stop out all these orders because now that they identify a clear support and resistance, he wants to take all their money away, right? So that's when we get the break. Market overextends. We get our vectors, our swipes. This is our first swipe into our second level. Sorry, this is our first swipe into our second level. So once you get that swipe, again, level 2 does the same thing, similar to level 1, a little bit longer in this case. Market gets in, picks up pending orders, accumulates. Again, because it's a bearish market direction, we're looking for sell orders, right? We're in a way trading with the trend in this case because it's a bearish trend. We're looking for those sell orders. And then once we get that level 3, what are we looking for? The reversal, right? That's what the level 3 is for. In this case, you can see market came up, first leg, second leg, indications of a reversal. We get back-to-back railroads followed by hammers, and then boom, straight away to the bottom of our level 2 again, similar to level 1, right? We get those stop hunt high zones right over here, rejection, and then we get a stop hunt. So if market comes back up, we know, okay, if market pulls back, if market overextends, pushes up, we know he's going to try to trigger the stops of these retail traders towards the high position. All right, so we know that our stops can be placed just behind. We get stopped out and re-enter without fear, or let the trade go, right? You got to trade smart, you guys. You guys got to understand when you come to these markets, you get stopped out. That's the point of a risk management plan, a system, right? You're already aware of how much you're going to be losing before you enter the trade. So getting stopped out is no worry. In this case, you wouldn't have gotten stopped out, would have shown another position for an entry. You wouldn't typically enter off of something like this. It's not enough because we don't have a second leg. We don't have trap market volume. No signs that it's actually going to reverse. But in this case, it technically does. But this would have been our ideal position on level 2. And then boom, market drops. Vectors. Those vectors indicate you got in on the perfect position, right? Because market maker got in, dropped. All right. And then again, we get that level break. Once we get that level break, what do you know? We get our second groups of vectors, our second swipe in this case. Second swipe, stop hunt low, market maker comes down. Now for this trade, I got stopped out of GBPUSD twice last week. at the beginning of the week, Monday. Why did I get stopped out? Because market maker, I was obviously indicating for that reversal from our level 3, which is what we're always looking for. And you know, sometimes they don't always pay out, which is totally fine as long as you understand why they don't pay out, right? In this case, I entered the buy position off the second leg double bottom, trapped market volume, had my stops just behind right around here. Why? Because I can see we have a stop hunt zone, right? That stop hunt zone I knew was going to get respected, right? I knew market maker was going to retest that price point. So market came down, broke just past that stop hunt zone, stopped out a bunch of traders in this case, pushed a little lower. Again, we have another red line, which indicates a rejection zone in the market previously. And then what do you know? Takes off just a bit, comes back to a break even, and then another sign of a reversal, right? Perfect indecision formulated in this case. So let me just zoom in so you guys can see it a little better. Let me just clean this up. And then boom, perfect indecision, right? Similar wicks on both directions. And then what do you know? Market breaks again, right? Stop hunt low, retest a previous rejection zone again, the black line, consolidates, accumulates, picks up pending orders, and then drops, right? So he completely broke the 1, 2, 3 level structure. But we know, okay, if he broke the level structure, that means there has to be more money to be made at this lower price zone. So he accumulates in this whole market right over here, this whole zone, right? So I know, okay, market broke level 3. The reason he broke level 3 is because there's a lot more money to be made if he pushed it one last time, right? And that's when we get our market level reset, right? So that's exactly what I identified. Okay, 1, 2, 3 down, bearish, still in a bearish direction. Level 3 is broken, so I'm going to use that to my advantage. I know, okay, once he breaks level 3, he's fairly overextended by this point, right? He's put trillions of dollars in the market to push it down this low. At some point, he has to come back to pick up the pending orders. And you know, once we get that level reset, typically we're going to reanalyze our level structure, right? So from right here, we would either identify a bearish market structure or a bearish or bullish. In this case, I was expecting the bullish structure because again, he's overextended. 1, 2, 3 down, broke level 3. We know the odds of a break, if you're inside the market maker masterclass, the odds of a break are 10 to 20%, right? The one time he finally broke it, accumulated, stop on high. We're looking for those long orders. We don't care about the sells anymore, right? So in level 1, level 2, level 1 and level 2 only, we were looking for those sell positions. In this case, we're not looking for sells anymore, right? Why? Because he broke level 3. That was our long order, right? Again, he's overextended. He has to pick up the pending orders that are accumulating at these price zones, right? So that's exactly what he did. Market came back down. I got that second leg double bottom that I needed right over here. I missed that entry, right? Once I missed that entry, I was like, okay, I'm going to set a price alert at the price point 1.36797. Enter the trade once it comes back, which it did. I was actually in a webinar with a student. We were on a Zoom call. We were actually checking it live. Told him to hop in. And then what do you know? We get that triple bottom now. Stop hunt low. Retested our previous stop hunt. And notice the wicks closed just behind that stop hunt zone. Stop hunt low. Or it can be seen as another second leg double bottom. In this case, I saw it as a triple bottom mixed in with that stop hunt zone, which is a strong indication again that the market maker is picking up the pending orders one last time, because things often happen in groups of 3, right? 3 swipes, 3 vectors, 3 groups, 3 hits. Anything more can be considered risky. All right, so that stop hunt low. Enter the long position. Vectors, strong sign that you're in the right side of the trade. Why? Because market maker had to get out as fast as he can. If he's slowly rising, doesn't mean you're in the wrong trade, but you want vectors right away, right? You want that sniper entry at the bottom, and then you want the market maker to vector out as fast as he can, because that shows that this is his intended direction. He wants to go this way. He just wanted to pick up the pending orders and then snap out of there, right? That's exactly what he did. He snapped out, right? And then I rode this trade. Actually, I'm going to set my TP and take profit that I previously had. I just erased it. So I entered the trade. I doubled it, so I brought my take profit all the way to this price zone right up here. So it was about 120 pips on the take profit, and then my stop loss was at this previous rejection zone as well. So about 30 pips stop loss on this trade also. All right. So that was my setup for this trade. So you can see right here, these are my confirmations that I was waiting for. Stop hunt low, reversal indication, or a triple bottom and a reversal indication. Or even better, a stop hunt low with a triple bottom plus that reversal indication. That's exactly what I got, right? I got that 1, 2, 3 reversal indication with the stop hunt low. So I got the last one, the last set of confirmations, which is what I needed to enter the trade. Once I entered the trade, let it go. I actually brought my take profit even higher. I'm pretty sure I brought it to this price point right here. Once I made about 50% of the trade, and right now I'm letting it go. I'm moving into the next week already in a profit. I'm pretty sure I'm up around 1.8K for the week on GBPUSD alone off 2 orders. All right, so I'm actually gonna put a screen recording at the top of the screen just so you guys can see kind of how I'm playing this trade for the week. And then what do you know? We ended the week in consolidation, right? Market makers moves. Whenever he ends the week or starts the week, he often ends and begins in consolidation, because before he makes any directions, he needs to know, okay, are there more sellers or are there more buyers, right? He needs to pick up the pending orders of both traders, right? He can't just open the week, boom, take off, because then he's instantly paying one of them, right? He needs to pick up the pending orders, accumulate, and then see, okay, are there more buyers and sellers, right? Whose stops am I going to trigger today? Which way do I want to go inside of this market? All right. And my goals for GBPUSD, my goals for this trading week so far is to just make sure I secure at least 1 to 3% of my account. Once I secure 1 to 3%, bring my stops to break even, let it be a risk-free trade for the week, and then transition into a swing trade. Right now, I'm currently swing trading GBPUSD because I have been holding since, I would say, about last week, Wednesday or Thursday. I can't remember exactly which day I entered, but I turned the day trade into a swing trade. Right, GBPUSD on the 15-minute, and just to give you guys a quick review again, let's go on the 1 hour. All right, 1 hour, you guys can see the level structure a little better. I should have actually done that first, but here it is. Right, we're at the high zone. Because we're playing off the high, we're expecting that 10 to 20%. We're expecting it not to break, which it didn't. Second leg, into the sell, boom, drop. Level break, vectors out, level 2. Again, because it's a bearish structure, we're expecting that sell. Second leg, sell, take it down. Break, level 3. Again, level 3 is our reversal level, our highest paying level. Why is it our highest paying level? Because we could pick up the orders in all these previous levels, in all these zones. All right, so it can come up, keep going, respect the high, drop again, right? Or it could break. In this case, we're just taking it to the high, it doesn't matter. But in this case, it didn't. It broke. Once market broke, level reset. I knew market maker was way too overextended. He had to come back at some point to pick up all these pending orders. The reason he even broke it to begin with is because at the time he was just seeing more orders, more money to be made if he broke it one last time. All right, so that's basically GBPUSD for the week. As of right now, I am looking to have a webinar with my students on Monday. On Monday, once I have that webinar, I'm gonna be analyzing any of these pairs for next week. So far, moving into this week, 1.8K made, GBPUSD long orders, and I'm looking to do the same thing this week. Find a position, day trade, turn it into a swing, let it ride out, make it less stress for myself. That's gonna wrap up this video, guys. Subscribe to the channel, drop a like, drop a comment. Take it easy.